Welcome, everybody. My name is Frederick Gross, and I'm one of the founders of BLCK VC, and I want to welcome you all to Be the Change, our follow-up to We Won't Wait here at BLCK VC. For those of you who don't know me outside of my role here at BLCK VC, I'm also a partner at an early-stage B2B focused fund called Storm Ventures, and I'm excited to be here alongside my co-founder.
Hi, everyone. I'm Sydney Sykes. I'm the other co-founder of BLCK VC and a principal at Wave Capital. Last year, we organized We Won't Wait. It was BLCK VC's response to a movement towards racial justice in our society. It was a call to action and an initiation of change to talk about how we could change venture capital to make it more equitable and to reflect all of the challenges our nation was going through. But this year, Be the Change is different. It's not just about continuing the change. It's about driving it. It's about making our society more equitable. It's about causing us all to change our DNA and the way we live our lives so that it changes the venture capital industry for the better.
We wanted to start this year a little differently than last year and really sort of focus on some of the wins and the successes that we've had as an industry. You know, it's been a long year where there's been a lot of conversations and a lot of hard work happening fundamentally. But, you know, one of the great things that we're seeing is that the industry is really truly coming together as a community to authentically discuss and confront these issues head on, to acknowledge the impact fundamentally that networks have to play in our industry. There's no denying the fact that the warm intro is a component that has unfortunately hurt communities of color with respect to accessing roles in our industry as investors and as accessing our industry as founders trying to break in and raise capital fundamentally. Now, while these conversations are clearly a step in the right direction, they can't be the only thing that happens. And the good news here is that those conversations are beginning to lead to some level of change. The fact, in fact, that we have hundreds, literally hundreds of allies and sponsors joining us for Be the Change is a clear indication of that willingness to engage as a community across these topics. But as you know, BLCK VC isn't just about the willingness to change or conversations. We want to talk about the data. We want to talk about the structures and the actual things that are happening in our community. And the good news is we are seeing some change. You know, as a whole, we've seen that the Black representation in venture shift from 3% to 4% of the industry. And while 1% may not seem meaningful, I can tell you as an investor living and working in this community, as a Black man operating in this community, that 1% is something that we all feel and are seeing happening and gives us a lot of excitement around sort of the shifts happening moving forward. But obviously 3% is not, 3 to 4% is not the level that we're aiming to see happen long term, right? BLCK VC has this mission to double the number of Black investors by 2024, and we're going to continue to push on that. Now, the good news also, though, is when you dive into the data, we're seeing some positive things happening at different parts of the ecosystem. From the junior bench, so those are pre-partner individuals, we started to see those numbers grow. Over the last 2 years, it's shifted from 5% to 7%. Now, that's due to a lot of work that the industry has done in terms of acknowledging the issues, but also because we're seeing programs coming into the ecosystem to drive that change. And some of those are programs that we as BLCK VC are working in partnership with so many different venture funds and stakeholders to help build structural systems to drive structural change. 3 of the programs we wanted to quickly discuss here that BLCK VC is pushing forward and executing are our Breaking Into Venture program, which we've seen over 50% of our alums break into venture. And this is our program that we use to help enable junior investors get analyst and associate roles. And so if any of you are looking for analysts or associates, reach out. We're here to help support you in that process. Our second program with the market is our Black Venture Institute. This is a program and an opportunity that we've launched where we've taken 100 Black executives over the last year and trained them about what it is to be a venture investor. How do you engage as a high net worth Black individual in the venture ecosystem, whether that's as an LP, whether that's as an angel investor, or whether that is as a scout fundamentally. And this last piece, scouting, really ties up into our third program that we're just incredibly excited about that we announced about a month ago, which is our scout training program. Over the last 12 months, we've seen record number of Black scouts minted in the ecosystem. And that is one of the most exciting elements that we think is a great early indicator for the access points happening in our ecosystem. As scouts become investors, have track record, break in as partners or as junior investors in the ecosystem. And Black VC has taken the call, has seen the fact that we've seen all these scouts emerge and said, it's our job as the Black community to support you, to help you be successful, and then bring in the experts from the funds that have run scout programs over the years to enable you to be successful moving forward. And so we're thrilled about that program and thrilled to continue to build on that. But while those are exciting elements that indicate success and that we're on the right path, we also have to be realistic that we have a lot of work still to do.
Right. Even though we're really excited about all these changes and especially excited about seeing our programs have an impact on the industry, there's a lot we're still concerned about. We've seen millions of dollars pledged towards racial equity and Black causes and supporting Black entrepreneurs, but Be the Change is not just about intent. It's not just about promises. It's about the results. And we don't know yet if that money is driving the most impact it could or is having the most effective impact on Black communities and what Black entrepreneurs are living. On top of that, what about Black check writers? Fred mentioned that we're seeing a small increase in the percent of Black investors, but are those Black investors actually able to control where the dollars in the VC ecosystem are actually going? Black check writers are the only ones who are able to change what our ecosystem actually looks like. If you just are an investor, it's not going to mean that there's going to be a meaningful change. And furthermore, that investment into Black founders is one of our core goals. We want to make sure that the next leaders of the tech ecosystem of the US reflect the diversity of our nation. And that means that we need to have more Black entrepreneurs. Still, only 1% of venture-backed founders are Black. That change is not meaningful enough. We believe that institutional changes result in the changes of our networks. Do the people we interact with today, the entrepreneurs we fund, the friends we interact with, are those different from a year ago? I don't know that that's true yet. Last year, we heard a lot of talk about taking on new meetings with Black entrepreneurs or having office hours or expanding new programs. But is that actually resulting in a meaningful, long-lasting, and systematic change of our networks? We're not sure of that yet.
Be the Change today is all about a call to action. But we're not going to tell you all and put out a call to action without giving you all tactical ways to engage. And we've got 4 clear tips on how you can be the change and how you can work with us in driving the change that we want to see. The first is to take note when there's no diversity in the room that you're in, whether that's your investment room, whether that's the board room, or whether that's a networking session or a conference. At the end of the day, silence and apathy are the biggest impediments to the change that we're putting forward. And it is on all of us to take note and be willing to speak out. Second, it is on all of us to hunt for new networks. This is fundamentally what we get paid to do. As investors, we seek out information around new technologies, new networks, and experts to do diligence and understand where to deploy smart capital. And the reality is, it is on us that we don't have diverse networks fundamentally. We have the skills to do this work, and we just need to be hunting and using those skills to diversify our networks fundamentally. And certainly Black VC is a conduit to help support that, but that responsibility sits with all of you fundamentally. Third, support and uplift the groups you see doing the great work. We all have built platforms to help drive new deals to us all as investors, to help support our founders fundamentally in the success that they're all looking for towards achieving fundamentally. And we've got to use those platforms to support and uplift the groups that are doing the work. We're not the only group here at Black VC. And it's going to take a community. And that also means supporting other communities outside of the Black community as well. We're all in this together. And if we can't work together and support each other, then certainly the success we would like to see happen will never happen fundamentally. And so please continue to support with your words, with your capital, and with your time, these communities. And the last point really hits home at the fact that we are seeing changes in the junior bench in terms of access, but those changes may not drive to a long-term change if we aren't focused on supporting that junior bench. What I mean by that is we all know that venture capital is fundamentally an apprenticeship model. That means it is on all of us as the senior investors, the partners, the principals out there to help support those young investors that are Black, that are Latinx, that are women in terms of developing the skills that they need to be successful. As an apprenticeship model, that means it's our job to teach and educate the community. And that's why half of the things that Black VC does is focused on education. But again, the knowledge exists in all of you. And we all need to take an active role in this apprenticeship model to help support the growth of the ecosystem. Now, with that, we're going to shift gears a little bit to the next part of our program. We're thrilled today to bring a number of folks that participated in our first event last year called We Won't Wait to talk about some of the changes that they've seen over the last year. You know, it's not just about listening to what Fred and Sydney have to say, but really what our peers. And so we're excited to bring up a handful of investors and operators who've successfully navigated the ecosystem to talk about some of the changes they've seen. All right, it looks like we've got folks coming on now. All right, I want to kick off by having everybody quickly introduce yourself and the firm or the company you work for. And let's start with Elliot. Why don't you real quick introduce yourself and we'll just go down the panel and then we'll jump into some questions.
Sure, of course. And Fred, it's always good to connect with you and the panel. Thanks for having me. I'm Elliot, 15-year veteran in the venture capital industry come July. And I'm a partner at Bessemer Venture Partners, where I lead our growth equity practice. So Bessemer has been around for a really long time, focused primarily on Series A, Series B. And myself and my team pick up really at the late Series B all the way up to pre-IPO. So really excited to have the conversation today. Thanks again.
Melissa, you want to go next?
Sure. I have many roles, but one goal, and that's to help Black and brown entrepreneurs be successful. First and foremost, I am an advisory member to Black VC, so honored to play that role. Today is co-founder of Eureka, which is a venture-backed small business tech platform, but I'm also general partner of 1863 Venture Fund. Thanks for having me back.
Elise, you want to go next?
Yeah, hi everyone. I'm Elise Smith. I'm the co-founder and CEO of Praxis Labs. Such a pleasure to be back in this conversation with Black VC. Praxis Labs is a learning and development company. We use immersive learning experiences in virtual reality, mixed reality, paired with actionable insights on our platform to create more equitable and inclusive workplaces.
And Dawn, certainly last but not least, please introduce yourself. And I'm going to steal a little bit of thunder real quick and congratulate you on successfully exiting Jazz HR in the last 12 months. Just an incredible work. And I know, a journey you worked hard on over a number of years and joining Rarefied Air as a Black CEO, founding executive to exit a Black enterprise business. So just extraordinarily excited to have you here. Why don't you introduce yourself and maybe give a little snippet on what you're working on?
Hey, Fred, good to see you again. And that's just Fred's long way of saying I'm kind of old in this. So I started, I've started two tech companies. The first one was in 2009 called Jazz HR. We grew that to about 20 million in revenue and sold it for 180 million a couple months ago, actually. I also started a new tech company pre-pandemic. I wasn't jumping on the wave. Called Commute with a K. That's an asynchronous video messaging platform for work. Basically, I think that recorded video has a place in the workplace of the future, and we're trying to build one of the seminal platforms to kind of popularize it for knowledge workers. So excited to be here and, looking forward to this discussion.
All right, let's get into it. So Elliot, my first question is going to be for you. Congratulations on recently joining the Venture Forward board. And as a partner at Bessemer, you know, you have a unique vantage, you know, and an understanding what's going on, what are the conversations happening on Sand Hill. What are you seeing happening? You know, what is the tone of the conversation with respect to, you know, our community right now?
Yeah, I would say it's three-phased. Some of it is going to be my own personal perspective, but I'll give you some what I think is behind the scenes. So I think, you know, as you and Sydney kind of opened with, we're living in this middle period where across the spectrum, it's like we want to celebrate the progress, but we also know the progress on the larger like scheme of things is still small. So like we want to congratulate the wins, but in the broader landscape of what's happening in venture capital, it still feels small and we have a long way to go. But again, you certainly want to celebrate the wins. I think the biggest difference, you know, having started my career in venture at Syncom Venture Partners, an all-Black firm in DC, we spent a lot of time talking about access to capital for underserved entrepreneurs. I hate the term minority, by the way. You'll never hear me use. I'm not minor to anybody. I'm just underserved. So when we talked about access to capital for underserved funders and founders alike, we talked about the structural things. Like that's where I focus my time. Fred, you know that from our experience together with the Black VC board. And I think if I think about my first board meeting, which I just had last week with Venture Forward and all the work that's going on with NVCA and really behind the scenes, it's the LP conversation that from the first time in my 15 years is changing. You know, I was somewhat nervous a year ago when LPs started having more conversations about backing, you know, underserved first time kind of Black GPs or funds, you know, going to large institutional funds that have no Black investors and really pressing them on it. And what I'll say to make sure I answer the question and end here is for the first time, I'm hearing LPs not just talk about a moment in time change, like during the current conversation, but structural change. Like we're going to back 10 new Black GPs that we've never seen before. And not just because it's a conversation today, but we're doing a 2 and 3 fund full cycle commitment. And that's new. Of course, there are some LPs that have just kind of moved into the space moment in time, and that's okay too. Hopefully it works out for them and they stick around. But from my conversations with institutional LPs, a lot of them are breaking the molds where they used to say, oh, well, this fund's too small. We have to allocate at least 10 or 25 or 50 million. They're creating new vehicles, generating kind of new relationships in the space. And again, I think it's, at least I hope the conversation today is that it's multi-fund commitments. And I think behind the scenes, that's the biggest change that I'm seeing.
Mm-hmm. Melissa, you know, Elliot just said he's seeing at least an increased sophistication on the LP side of understanding the nature of the problems and their role in terms of being solutions and change agents. Are you seeing that as well? I mean, you're, you know, a Black woman who's raised a fund, right, and who's gone out in the market in the last 12 months and engaged proactively around getting those commitments. What are you seeing?
I think there's been some change, and I want to echo Elliot. It's one of the reasons why I don't use minority either, but I say the new majority. You know, I think on the fund side, there's more LP interest. It's still a slog to get them to convert on the fund side. I would say on the entrepreneur side, I've been optimistic. Eureka just closed, I guess I'll call it our Series A1. And not only did we get all of our prior investors, but we got new investors, and one of them was Black, which was just like so exciting. We got Cleveland Avenue to come in and support us. And that's huge. And I think it's huge because we couldn't get to him the first time. You know, Don Thompson is just an amazing person coming out of McDonald's. And I think it's an opportunity also to not just get his money, but we've talked about possibly having him be a board member. Hopefully I'm not putting myself out there too much, and hopefully he says yes, but I think that also changes the trajectory, right? As a company that is to help small businesses, but a specific focus on women entrepreneurs of color, to have another person in the board seat with me being right now the only Black director, that would be huge. So I do think that for entrepreneurs, and hopefully Elise is having positive experience because she's out there killing it, is that there are more LPs that are Black, which makes the conversation a bit easier, but there are also more LPs because of the work you do, Elliot and Don having an exit. They are a little bit more patient. They're a little bit more understanding, and they're certainly intrigued in a good way of trying to be engaged, not intrigued to try to prove it wrong. But I would say the nature of our conversation shifted during this raise, where people understood finally the problem we were trying to solve of helping Black and brown entrepreneurs. And it wasn't like, prove it to me. It was like, oh, well, tell me what success you've had. So I think that's a good thing, that the nature of the conversations are changing to less skeptical and more engaging in how can we be a part of this.
Yeah. It's certainly helpful. I mean, I think one of the tensions can be, the pace and the timelines that LPs operate on look different, right? And so much of the work Black VC is advocating on behalf and that we talk about and why we want to diversify the venture bench is ultimately to provide access to our community of founders and operators. And so, Elise, I'd like to kind of bring you in and hear from you, right? You closed around in the last 12 months. You've navigated through this ecosystem and you've been a VC before, right? And so if anyone had access to networks, you certainly would have had access to networks. And I'm curious how that experience was for you and whether, when you look back, was it different? Do you see changes happening relative to your set of experiences on how investors have been engaging in the past with underrepresented groups like our community?
Yeah, definitely. Well, I just want to say I've been inspired by Elliot, Melissa, congrats, Don, all so exciting to be a part of this conversation. But yeah, happy to answer that question. I think you're right. I came from a New Schools Venture Fund, a philanthropic fund. I was investing in predominantly a portfolio of Black and Latinx entrepreneurs solving challenges within the DEI space. And so for me, seeing Black and Latinx, honestly, predominantly women running companies, getting money, like that was what made me see a role or see this as something that was possible for myself. I also went to Stanford. I got an MBA. I got a master's in education. So like if anyone could have been set up to raise around, like I feel like I had a lot of access and a lot of privilege there. But even still, I found it hard, right? Like there are so many unwritten rules. There are so many things that you don't even know the questions you need to be prepared for or what's going to be asked, even with watching all the videos online of like how to raise capital. There's still moments that I found myself being like, oh, I'm not really sure what I'm supposed to say here. Or can I answer that question? Am I supposed to answer that question? And so for me, what was most helpful was talking to other founders who had gone through it, who had just gone through that process. But not everyone has access to founders who've raised capital, right? I was very lucky. And so I think what has given me hope is seeing that VCs are actively looking to talk to more not underrepresented, the new majority. They're looking to see underserved founders who, they want to have those conversations and they're actively having them. And so I think that's encouraging. But I also think there needs to be a moment in those conversations where if a founder says something, that's a little different than what typical folks who know all the rules say, that there's some grace given, because I think even with that access, those networks, these communities, it's still incredibly hard to do all the things in the right way. And so giving that grace, not around is the business good or is the pitch strong, but around some of those unwritten rules.
Yeah, well, I mean, grace is such a big part of it, right? Coming in with the willingness to see you be successful versus a framing of, you don't fit what I've seen before for any number of reasons. There has to be, as we develop the new pattern matching kind of algorithms in our mind as investors, we've all got to come in with an open mind, without a doubt. Don, I want to pull you out here because, you're unique. You really are. I mean, we talk about unicorns in venture, but someone like you who built a business in our ecosystem, raised capital, exited it, and now we're a second-time founder building again. What are you seeing? What's changed, right, on this second journey relative to that first journey? Are you seeing actually, shifts happen as you kind of raise capital and engage with investors?
And I'm going to be no, I don't. It was actually moderately easier for me to go out and raise a 400K pre-seed round the second time. I heard I started my first tech company in 2009. I heard that 1% number back in 2009. I am now grayer, much older, and I still hear 1%. It's pathetic. I think that we often don't talk about the fact that, a lot of what gets used against us is the idea that we haven't built big companies. Last time I checked, Elon Musk isn't successful because he bootstrapped all of his companies to be really big. So there is this unfair baked in assumption about what we're capable of doing. And I think that we're always looking at the wrong metric. We shouldn't be looking at the amount of value created. We should be looking at the amount of capital burned. I think that, Jazz HR could be 4x its size if, and I'm very appreciative of the investors that invested in me. It's one of those challenges I've always had is people always asking me, how is it difficult to raise capital? I was actually successful doing it. And it was very hard for me to come to grips with the fact that it was a very special thing for me to be able to do that, because that just made me realize just how rare. I didn't want to be rare. I didn't want to like think that that was like a unicorn thing to do. But, you know, the amount of capital burned, having more capital allows you to make mistakes. You know, you can make bad hires. You can try out different things. Like the window, or rather the needle hole that African-American entrepreneurs have to go through in order to achieve success is interesting. It's very small. Now, that being said, if I take off my cynical bone, because this comes from the stress of being an African-American tech founder, I would say that, you know, I'm seeing big rounds led by, there's many more African-Americans. Like I've been mentoring African-Americans since 2009 in tech. Many more of us are much more in tune and understanding of like what, from the lexicon of venture capital to the journey to what growth needs to look like in your company, and also to some of the fundraising, the sheer dollar amounts that we've seen companies like Squire and so forth raise. You know, I think one of our biggest challenges is the fact that we don't have like Paul Grahams and Mark Andreessens, sort of like people, like one of the things, and I'll shut up here in a second, one of the things I realized that's relatively unique for me is, you know, I'm still working on a new company, but you could argue that I now have more freedom to operate and think like some of those folks. You know, we don't have those people in our ecosystem that basically create this comfort and space for people to be able to learn about venture, maybe get small checks to be able to grow their business and so forth. But I mean, to me, I look at it this way. The reason why I say no, not much has changed is because, you know, it's a tech startup. There's opportunity cost to not being able to get what you need to be able to run your company fast enough. So I don't celebrate the fact that only 1% of venture capital, if it goes up to 1.25% in the next 5 years, it's pathetic. Let's all just record this moment right now, and let's have a conversation in 3 years. If it's still 1%, what is the purpose of this conversation right now? Like, I'm that cynical about it because I know what that journey is like. And, you know, in my opinion, I think that VCs should open up their books and be very transparent about the amount of money they've invested in women and minority companies versus the amount of value created. Because that's going to lay bare the fact that you put an African-American entrepreneur with no funding and no connections up against even Elon Musk. Elon Musk is pretty smart. He'll probably still beat that person, but he's not going to crush him the way that he would, given the fact that, you know, you got people who can burn millions of dollars to make mistakes and to find the next big thing, and we can't, right? Like one of the things, I had to hire a growth CEO to run my company because I got ahead of my skis, because my company, in my opinion, was so compressed in terms of its ability to deploy capital to do things it needed to grow, that by the time we got that capital, I made a mistake of trying to invest in too many things all at once in order to try to catch up to my competitors who weren't as big as me at the time, but were able to raise rounds bigger than me to be able to move faster. And luckily, you know, we survived, but it's things like that that really make it difficult. So you're always going to get, for me, the cynical point of like, no, I've had enough rude things said to me over the course of the years to say, let's memorialize this. If in 3 years we say 1% again, none of us did anything.
Yeah. Don, I mean, the reality is we have to be honest and talk about these issues straight up, because at the end of the day, if we don't, we do a disservice to ourselves, our community, our networks. And the reality is venture in the structural organized capacity has a disproportionate role to play in our community because we don't have the wealth developed in the Black community in the same way. And wealth, unfortunately, is highly correlated to the ability to drive friends and family rounds, the ability to start firms and funds that can meaningfully support founders that they can actually execute. And so on that point, you know, one of the conversations Elliot, myself, Melissa have had a number of times, and I'd love to pull Melissa and Elliot both into this, is a conversation around, hey, are we enabling investors in the entire ecosystem appropriately, right? Are we enabling checks and check writers that can write the size of checks that are realistically required for the Black venture community and the Black tech community to be successful? What are you guys seeing happening there?
Yeah, I want to chime in here because it's really important. And I think it relates to some of what Don said in his spot on perspective. So as a mathematician who proudly went to HBCU and Morehouse College, I don't pattern map to venture capital or my career path at all. And I'm going to come back to that point. However, I do think 1% can mean different things. Statistics can mean different things and numbers mean different things based on the context. The average like Series A round right now is like $50 million, right? I saw a $525 million Series A go out this week at Transmit, which is just like mind-boggling to me. So the reason why I mention that is, yes, 1% is woefully low. But when I think about the relative round sizes that are being raised now, even for Black founders in Series A's versus like 5-10 years ago, there is a difference. So I oftentimes think it's, again, as a mathematician, it's important to look at the percentage, of course, but also look at aggregate dollars, because I do think there is progress being made there. And I do think it also, like small progress, let me just be clear, but progress nonetheless. But as someone who, writes growth stage tech, probably on average of $30 to $50 million out of the gate, I really care about where do Black founders go when they do raise their Series A and then have to go raise a 25 or 30 or let's hopefully more Squire-like situations in the Series C. And the reality is, I think the number is there's 4 Black check writers that can cut that check in the country. Now, I don't know globally where that sits. So I'm super excited about the changes that are happening in seed and Series A, and there's new funds being raised in the kind of $20 to $50 million range, even up to kind of 100-ish range. However, that's such a small piece of the total capital life cycle. My goal is when I hear all these stories about, oh, well, this is like an all HBS GSB cap table, I want an all HBCU cap table or all Black cap table. But the reality is, to Don's point, that takes $50 to $100 million to have that multi-billion-dollar outcome. And we're still in the process of stitching that all together. I mean, I personally feel a lot of responsibility and quite honestly some pressure to make sure that those founders that reach the Series C have an equal shot from me and the 3 other cats that I know that look like me. And I'll end this by saying, look, here's the reality. Every week I have Black founders that reach out and they say, hey, Elliot, can you introduce me to XYZ fund? I see that you have a relationship, you're on board. I just tell them, don't waste your time. Like it's not a fit for you. Like part of my role here is not to bullshit other Black founders, to say, look, if there's no Black founders where they've led around, the likelihood that you're going to be the first one is supremely low. I can help and I'm happy to make the intro, but when I think about your time, Elise, it's super like tight. I mean, you and I just had a conversation about this very thing like 2 weeks ago. So I'll just leave it by saying, we have to be able to see ourselves reflected in the people that are funding our companies. That's what Black VC is about. That's why I'm wearing this Black VC jacket, because we have to. Like, I talk to my partners, I say, well, what is the ROI on another HBS or GSB grad? No shade, Elise, or even to my wife, who's a GSB alum from our MLT class. But what is the ROI? If we just hire the same, if we're not crushing those networks already, we have to expand it to HBCUs, other schools, other networks, so that when Elise and the Dons of the world come to pitch us, they see themselves reflected in the people that can cut the check. So I know I've been rambling here, but I get so impassioned about this because the numbers are changing, but the check writing ability at 10 million and beyond is so minuscule. I mean, I can count them on one hand, 2 if I really stretch some definitions. So I'll leave it with that and pass it to Melissa.
Well, it's a hard one to follow because you're right. We have had these conversations. I want to put this in some context, and I'm going to integrate what some people are saying in the Q&A in the chat. I think there has been some change, right? I think clearly, let me speak for myself, but most of us in this call are pretty darn privileged ourselves. So I would say that if we parse this out, I'm happy to say in the angel space, of which I'm an investor, part of Rising America with Lorene and those folks and Nora May, I think there's been a great influx, or bigger influx, I should say, of Black angels that is helpful. And so I think, to Elliot's point on the early stage, I think we're beginning to see more Black entrepreneurs get funding. The challenge is that only happens because it's our money. We don't have to count on somebody else. I think when I hear Elliot and Don, it's like, yeah, once again, if we have to count on somebody else, the chances of success or likelihood just dramatically increase. And I love Don's point, because I think at some point in time, we have to stop trying to show up as they expect us to show up and just be able to show up as ourselves, which is why I'm excited about a lot of the new funds that have come on. And the challenge is it still doesn't reach what Elliot was talking, because if you look at most, not all of the Black funds, they're considered micro VCs. They're going to get 5 to 7 deals. That by no means hits what, even 2% of all the entrepreneurs that are out there. So I think we have a short-term moment of optimism that I'm excited by, that I want to amplify so that we just show some progress. But I think we've also got to figure out, which is what I think you, Fred, and Sydney are doing, is how do we scale that? How do we get these first-time fund managers? I mean, I was so happy to see this last class of Kaufman Fellows going, okay, now these are the brothers and sisters that need to have a $100 million fund at the next level. Because when you think about Black folks who have their own Black funds at $100 million, I'm with Elliot. I think I can count them on one hand. And they're almost all fully deployed. And so I do think we have to figure out, how do we have enough capital to manage the ebbs and flows and cycles of entrepreneurship? Because clearly folks are jumping out of corporate America and there's not enough money to meet them. And we've got to figure out how to get more of us on the LP side, not just the GP side, and figure out how do we begin to find aligned LPs who are willing to step out there. If you look at, Fred's heard me say, when you look at the Black funds that have started, we just got 2 Black women. And so we've got to not just think about the racial diversity, but the gender diversity of who the entrepreneurs are and what we feel comfortable with. And I'll leave it at this. I think that's the problem, right? Is that, a guy, a great economist, I would say great in my mind, said something that in investing, profitability is generated by being uncomfortable. It is amazing to me that nobody in the LP world wants to be friggin' uncomfortable. And so we have got to really push people to be uncomfortable. And I do think the work that Black VC is doing and others, where we're going to, and Venture Forward, we're going to have data that hopefully demystifies that we can't grow big companies. I mean, Don should have been all over the place and he wasn't. But when we do have these exits, that they're not unicorns, but they're a proxy for so many other entrepreneurs who could be where he is if there was just more capital unlocked. So hopefully that, corporations will see that. Hopefully more LPs will see that.
I couldn't agree more. I think there's clearly so much work to be done, and there are great organizations, like Kaufman, like HBCU VC, like the Black Venture Capital Consortium, Venture Forward, all talking and trying to bring some advocacy to these issues. And so, we got to continue to work together, but we got to make sure we're looking at the right data points. And certainly, how big those funds are, the check sizes are a big part of this. We did some work ourselves as Black VC just to evaluate things. And we realized, the numbers of Black partners at firms with $1 billion under management, which, is sort of the fund size you need to be able to write some of these bigger checks that Elliot's referring and referencing. It is dismally low. You're talking about sub 30 people across this country. And that's, where some of the issues fundamentally kind of come together. Elise, Dawn, I'd love to pull you both in, to talk and hear you guys kind of speak to your experience on whether you're seeing, this conversation translate to shifts within the founder community you sit in, right? Are you seeing founders, Black founders, non-Black founders engage in this conversation differently? We as investors are seeing things like, the diversity rider, where founders are now saying and investors are saying, hey, we want diverse people and individuals on our cap table, underrepresented groups on our cap table. Are you guys seeing that become a movement, or is this sort of a missed opportunity? Dawn, Elise, either one.
Yeah, I was ladies first. Chivalry is not dead.
All right, I will jump in. I think the diversity rider is super interesting. I think firms that are putting things on term sheets where it's like, we're going to check in on diversity, equity, and inclusion in your organization is a step, right? If you're not writing it down, you probably won't be doing it. And so to have that be something at least written down is the first step. I think I'm seeing folks in my network, at least, I get a lot of emails from entrepreneurs saying, hey, I have this job open, and they're emailing me, and I wish there was a way that I didn't have to be a brokerage to networks of entrepreneurs and potential employees of color, because I think there is a desire to get JDs in front of a diverse group of candidates. And I think how can VCs play a role in that? Not only, putting that diversity rider, putting something in term sheets, talking about how you're going to look into diversity, equity, and inclusion at your portfolio companies, but how can you, at that check-in call when people are talking about hiring, ask if their candidate pool, if their candidate slate is diverse. Ask how you can be a brokerage for networks of diverse talent as a VC. How can you also think about hiring and encouraging folks to hire folks in a different way, being more open-minded to a non-traditional candidate coming from a school that isn't the GSB or HBS or you name it, right? I think VCs actually have a lot of power with some of their entrepreneurs when entrepreneurs are like, we're hiring for head of sales. And if the folks you bring to that, as recommendations for those entrepreneurs all happen to be folks from your network, the likelihood that any of them are going to be diverse is very low. And so how do you think about not only as a VC trying to diversify your own pool of talent that you're recommending, building relationships with just great operators who are from a diverse background, like then you have more folks to say, hey, like I think you could try and poach this person or get that person. And I think that's what I'm hoping for, where, VCs, and I'll say that the people I'm partnered with are really great about that. But it's about how do we make sure that we aren't just pushing this pressure back onto entrepreneurs, because I think oftentimes it's like, well, the founders themselves are, that's what they went with. And it's like, well, I think it's a whole ecosystem problem. It's a whole ecosystem topic that we all need to find ways to be a part of the solution.
So I think, the main thing is what I deal with a lot whenever I talk to founders is there's a little bit more confusion. Like whenever I was starting my company, I taught myself to write software. You just have these assumptions that the way the corporate world works, you got to work twice as hard to get the same level. You just kind of accept that. I think when you have a younger entrepreneur that grows up in a world where the president was African-American, right, and within their childhood, I think there's sort of a surprise that, I would make an argument that in some cases, I think in the African-American tech ecosystem, I think that a lot of the people who are in power, candidly, I think that they build an ecosystem. I think that there's some people who don't take meetings. There's people who've missed out on huge deals because they ignored an African, if you're African-American and you send me a message on LinkedIn, I'll talk to you, period. I don't care if it's 250 people. And I think that, the challenge that I run into is, and the reason why I'm so bold now is I have a bully pulpit now. I'm going to bootstrap my new company. Like, I don't care what a VC thinks of me at this stage. I want to put myself in a position where they want to invest because the company's great. And also another thing that I'm doing is I personally am saying that I have a mandate with my financial advisors that I don't know the percentage yet, but it'll be a significant percentage of my assets. They need to go out and source non-ludicrous and other celebrity type tech or business opportunities from early stage entrepreneurs. And they have to be of the quality and so forth that they are going to recommend them also to their other families and entrepreneurs within their the people, because I realize that's a unique bully pulpit that I now have. If I can help an entrepreneur get a check from me and also maybe 3 other checks to fill out around, that's one of the biggest challenges we have, is just being able to raise, I don't know, $150,000 so we can get moving forward with our business, right? That we're at that level of challenge. But I think the biggest challenge for younger entrepreneurs is, I'm 44. I grew up at a time whenever I felt overt racism. Younger people don't really experience that. And the soft bigotry of low expectations in terms of, a person that looks like me or Elise being able to say this company, if we hit our numbers, we're going to be doing $75 million in 10 years. Most people don't hit that, right? And the investors know that, but we don't get as much credit for willing to swing the bat as hard as other folks. And I think one last thing I want to say too is I think we run a little bit of a risk of spending too much focus on the idea that diversifying LPs and investors or GPs is a key component to solving this problem. Because to me, that means that we're accepting the fact that non-African-American investors don't have to figure out a way to diversify or rather fix their thought process around who should get checks and so forth in order to build big businesses. And the biggest problem we have is really on the small side, because I deal with people who can't raise $200,000, right? Like this is a true story. When I started my first company, it was a wildly successful company for Pittsburgh at the time. So people in Pittsburgh kind of considered me to be like a successful person in tech. So they wanted my advice. And that carried all the way through a decade later. I had a person who looked up to me call me up whenever I was out trying to find $500,000 for my next company. And he was trying to get advice on how to raise $1 million. And I was giving him advice the best way I could. And then he said, okay, I'm going to go out. He had a conversation, I think, with Sam Altman's brother or something like that out there. And he raised $1 million like over that weekend because he had a dinner. So I'm giving advice to people who are raising money way faster than me. And the roots of why that is occurring extend way before Elliot can write a check, right? One of the challenges I have when I think about investing in a Black entrepreneur is, man, if I give this person, $100,000, will they even be able to raise $3 million from someone, right? That's a challenge, right? Because if we don't have a clear path to being able to go from pre-seed to seed to Series A, Series B, Series C, we can run into a situation where we watch as our $100,000 investments in early stage companies peter out on fumes because we're running into a wall where our founders can't wait for the diversification of the investor class, right? My urgency and my cynicism is around the fact that, like, I don't think one goddamn moment about how many African-American tech entrepreneurs there are, or rather African-American investors and so forth there are, because I know that that's going to take a long time to change. And last time I checked, Loom is growing really fucking fast. And if I don't do what I need to do to keep up with them and recognize that my challenges are my unique challenges, I'm going to miss my opportunity. And I think that the biggest challenge we have is the people who actually get, like, I live in Atlanta. Two of the most successful tech entrepreneurs in Atlanta are George Azzi and Tope Awatona. Both of them almost damn near had to bootstrap their companies. And it just gives you a sense for just how ignored the potential of African Americans in tech is. And the urgency of people's livelihoods and their dreams can't wait for this to be solved. And I think that in that, it makes it a very difficult puzzle for us to solve because, I mean, heck, I joke, I would love the day when I see an all African-American team blow $50 million on an idea that just didn't work out, because we just don't even get a chance to find the next big thing by making mistakes that big without ruining our careers. So there's just a lot of hairy pieces to all of this that my purpose for kind of taking this bully pulpit here is to just say it's a lot more complicated and it's a lot more nuanced. And I think everybody knows that. But I think the thing that I want investors and everyone to understand who are listening here is that, entrepreneurs don't have time to wait for you to figure out why, in the back of your mind, when that young African-American woman says, this company, if you give me $250,000, we're going to get to $75,000 in monthly recurring revenue. And for some reason, you don't believe it. And she's got 2 years experience, but you wrote a check for, I don't know, Yik Yak or somebody from back in the day on one meeting, right? That's an internal discussion you need to have with yourself. We don't have time to wait for it. We don't have time to wait for Black VC to find more of us so that we can come in at junior roles where you're not going to give us as much power to make the key decisions. I'm not poo-pooing it. I'm just saying that we're at that early stage. We have to focus on the fact that, we can't, there's people in here that want to be successful in the next 3 years. And what can we do? And my commitment is I am going to be writing early stage checks to African Americans and expecting them to get exposure to more venture capital funds and so forth by the bully pulpit. And I think we need to try to figure out a way to do that as well. Probably don't have to say anything else the rest of this talk, because that was probably everything I needed to say. But I just appreciate the time. I like what everybody's doing. And as you can tell, like I said, this was all Black. I've been through a lot.
Do you mind if I just jump in and say one thing to what Don's point, that piece around that follow-on funding and putting, like, what I found is, like, after having one person say they're going to invest in me, then everyone's like, oh yeah, it's de-risked, I'm going to jump on, it's going to be great. And like, my encouragement for the VC community is to be willing to be that first person. There might be other angels, you don't know their names, there are other folks involved, but be willing to be that first person to say, yep, I'm backing them. Let that Black founder be able to take your name and your firm to others. Because I think that is what I've heard time and time again, where VCs have this notion of like, well, as long as I can say, Frederick was in, Elliot was in, Melissa was in, it de-risks it for them, so that if you fail, they're like, well, we all got it wrong. But it's like, be willing to be that first person to back someone, because that actually makes all the difference.
Yeah, I just want to add to that. We're very, 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 very briefly and quickly in that, what was so amazing about my investors is I always said it's like Yao Ming. Like, they put my face up on the board with the rest of their partners, and maybe no one said it, but Yao Ming was the first Asian American basketball player. No one's going to talk about it in polite society, but that's what I appreciate about Sean Sebastian, who's in this room, Paige Craig, who was my first investor, is that these people, to Elise's point, whether they did it as colorblind, whether they thought that, I need to step up, they gave me the social proof I needed to be able to go out and raise more capital. And I think that, we don't have as many African-American, I think African-American investors often end up in the later stages, but we really need social proof at the stages when we're raising like $500,000. And that's going to mean that there's going to be people who are not African-American who are going to take a little bit of a risk and give us some of your social proof, because that really does. Paige Craig said, I'm going to give you 100K. I raised 700K in 3 days, which completely made me realize the value of having someone who kind of believes in you.
Absolutely. Melissa.
Yeah, well, there was so much. And I want to say, I got gray hairs too, Don, but I still got to catch up with you, brother.
Hey, I don't have hair because of it.
I feel like when I see young guys like you, that's just like a fashion statement, because everybody's like cutting their hair.
I wish.
Yeah, but there's a couple of things. I think one, I just want to double up what Don said. I think that the key for me for many things was we just can't wait. I mean, the reality is that there's enough Black people sitting in executive spaces and places that we have got to, within our own community, take it upon ourselves to want and be actively involved in supporting entrepreneurs. There are angel groups, there's, crowd equity, there's tons of ways. So I do think one is that we as the Black community need to make a shift, that it is time we invest in ourselves and not wait for somebody else. I think the other piece that Don talked about is there's lots of signal effects, and one of them is a lack of data. I'm sure everybody on this call has been trying to get places like PitchBook and others to not think it's going to be punitive, but recognize the challenges they're creating by not demonstrating that there are lots of Dons or people on the Don track, or how do you even find an Elise, because that there are actually Black women in tech, despite the fact that the conference showcases thousands year over year. And you and I have talked about this, Fred, but my work as a professor, it costs at least $250,000 more for a Black entrepreneur to start the same exact company as their white peer. So when a Black person shows up and they're making $500,000 or $1 million, they automatically should put to the top of the board. And so it's not just that data, but I do think we've got to do a better job of painting a picture on not just who hasn't made it, but the success rates and what that journey is, so that they can quantify that $1 million Black business, to me, is the greater likelihood of success than $1 million white business who has been subsidized, supported, used daddy and cousin and coach's social capital, and we don't have that privilege. And so we've got to figure out what are the non-monetary signals that demonstrate the fact that Black entrepreneurs are way more better to risk on. And then the final thing I would say is, I was just on a panel this morning, we do have to have a better conversation around failure. Because failure doesn't mean I don't come back. White guys get to fail all the time and they get 10 more chances. Black people fail and they're about to dig a grave for us and say we're dead and it's gone. And so I do think that we have to be able to disaggregate failure because you don't know what the hell you're doing, or failure because you didn't get the right resources. And I would argue that if there ever was failure, it's not because we didn't know. It's because people did not give us the right resources, or they stole our idea, and when we pitched it, they funded somebody else. So I do think we've got to put some walls up here around how do we protect our our sales, but we've also got to help craft a different narrative around our success and our resilience, because everybody talked about Tulsa, but they didn't talk about the fact that if Tulsa was not burned down, how many more friggin' angel investors and venture capitalists would have had, but also didn't acknowledge that if folks in Tulsa could do that, why the hell can't we do that now? And why can't people like Elise and others just get the money they deserve? Because they're going to outpace everyone else. But we need places like Black VC, and we certainly need more of Don to be able to demonstrate that there are indeed unicorns. They're not one and done. And how do we support more of them coming up the food chain?
I couldn't agree more. And I think, look, this is part of the conversation. One of the things Black VC is increasingly having conversations around is sort of what are the role and responsibility of LPs and aggregate pools of Black capital, right? One of the things a lot of folks out there don't realize is that one of the largest aggregates of Black capital is public pension funds, because government jobs have been some of the best jobs in the Black community historically. And then those public pension funds don't get reallocated into the community in different ways to invest into the success, the thriving, the build up, and the wealth creation in those communities. Elliot, I want to throw it to you. I know you were about to jump in there for a second. Let's hear some of your thoughts.
So I think my biggest takeaway is I just need to hop a flight to Atlanta and break some bread with Don and have some Uncle Nearest and talk all this out, because we've been doing this long enough. But I do want to try to tie a couple of themes together, and use it and do so in the backdrop of my favorite topic, which is diversity theater. Because I think we're living through this really, really unique time where everyone is writing about, speaking about, blogging about, and one of my most hated things, appropriating our culture about investing in diverse and particularly Black founders, meaning they love our culture, but they don't love us. And that's just a reality that more people need to be comfortable speaking about and living in. Look, I do want to just address one thing that Don said, which is he doesn't believe that an increase in senior partners at large multi-billion AUM funds is going to move the needle. And I just fundamentally disagree. And it's not because there's one solution that we need more Black GPs doing early stage. We need that too, but I promise you we need both. And I'm going to tell you why. From my personal perspective, if you go to bvp.com or Bessemer's website, I don't look like the rest of my partners. I wear J's to work every day. I have my DJ equipment in my office. I'm very much myself. Fred can attest to that everywhere I go. And who I am and where I come from and what I care about is a superpower, quite frankly. What's really interesting now is I'm the only Black partner at the firm, one of the few of a Sand Hill Road AUM fund. And the number of emails, Slack, and requests I get about, hey, so my board doesn't have any diversity on it. Could you talk to them about that? Or, hey, our Black ERG is talking about these things. I have no idea what they're talking about. Could you go? I don't have enough time to cover it. So I'll open with that. And what I'll really talk about is, just even the journey that a firm like Bessemer that's been around a long time is going through. We have totally rethought how we think about our LP base, who our LPs are, even down to like supplier diversity. Now we're a small venture fund, but we buy stuff all the time and rent venues out all the time. We're thinking about how we do pipeline, how we hire. When I got here, one of my biggest things was like, I'm not a cultural fit, right? Fred, you've heard me talk about this all the time. What I really care about is, am I a values fit?
Value add.
I manage $1.3 billion and we run a 100% diverse team. I promise you, the way that we interact with entrepreneurs is different because we see ourselves reflected in the people on the other side of the table, or I guess right now a Zoom screen. And very likely my next investment is going to be in a female entrepreneur that we're in the late stages of putting something together. And we're talking about $30 to $50 million. These folks need us on the other side. And again, it's not just for the deal, it's for like the full stack change that has to happen in our industry. And it does not happen until there's senior partners in these places that can say, hey, like I'm calling bullshit on this. I remember where I was when I got the call about some of the like side funds that got set up like overnight last year coming off of George Floyd. And my partners called me and they said, hey, Elliot, we can do something 5 times larger, 10 times larger. And I said, you better not. Because the moment that we start sending Black entrepreneurs to a separate line or a separate water fountain or a separate fund, that's when I leave, because I'm out. Because we cannot manage $3, $5, $8 billion and have like a side $5 million thing for people that look like me. That's crazy. That makes no mathematical sense. When you see the size of funds that are being raised right now, like investment funds, and then they carve out some small other thing, it's like you are telling not just the market, but your LPs, and quite frankly, you're telling the entrepreneurs pitching to you exactly what the fuck you feel about them, which is you're not good enough for the main fund. You're good enough for this side thing. We'll put some celebrities around you. We'll over market it for the size of check we're willing to write. And then we'll appropriate the culture. We'll feel really good about it. But like the whole like allocating capital thing, I don't want to really talk about that. But all the diversity theater is what is really played into. So Don, I do agree with you, quite frankly, that we need changes across the stack. But I do want to just end on the point that, you know, the whole idea of diversity theater, unless there are those of us inside of these funds to call bullshit on it, it's going to get over accentuated. And then that 1%, not only will it stay 1%, it will decrease because the funds are getting bigger and you're going to have less and less decision makers to make sure that those aggregate dollars that then translate into the percentages, it actually increases and changes. So I'll leave it with that. Actually, I'm going to say one last thing. 4 or 5 years ago, I sat down with Lo Tony, who I saw pop on and pop down. And at the time I was at Microsoft Ventures and he was telling me about Plexo and everything that he wanted to do. And I remember, hopefully he remembers this, telling him, hey bro, like what you're trying to do might be one of the most important things in venture capital. And when I think about the amount of Black GPs that groups like him, First Close partner, shout out to Ed, shout out to Jackson over at Wellington doing his thing, like the ability to fund Black GPs at a sustainable level and also do some direct deals. I think it speaks to early stage, large institutional check writers, and then the fund. So Don, hat tip to you and all the work that you do. And I love everything about your perspective. I would just broaden the perspective to say, I think it's a full stack solution. There's not one single solution to any of this, but we do need people to call bullshit on the industry because 99% of the AUM is controlled by people that don't look like us. So yes,
I just want to clarify. No, I never said that there shouldn't be Black VC.
No, I know. You said you don't want to wait on us.
Well, yeah,
give us some time, brother. Give us some time.
That's what I was saying is that unfortunately, we don't have the time. If you're a 25-year-old person who doesn't want to get a job, you don't have time to watch an entry-level person in a venture firm become a partner. You just don't have the time for that is what I was saying. But no, I mean, trust me, having been through this and never seen an Elliot Robinson when I walked, like I knew every single time I walked in there that no one looked like me. And I knew that they were making their first bet on an African-American man if they invested in me. No, it's a privilege to be able to even have a conversation with you. It's just that, you know, I'm not going to wait for Elliot, right, or anybody to get going.
Well, and that's the key.
Let's either get some Busy Bees or some JR Crickets, and we'll get some Uncle Ernest flowing, and we'll get it going, man. It's so good.
Well, and look, if anything, I think the reality is that there's no one silver bullet, right? There's no one solution. We've got to take a multitude of approaches to solve this problem. And I think what Don's really hinting at is that the time is now, right? The wealth creation, the acceleration of that wealth creation, the takeoff. That speed that tech is growing wealth at, you know, it's to the point where every year that we wait to drive more impact and access creates huge inequalities in terms of the wealth creation, and that negatively impacts the Black community in a way that just cannot be underlined more, emboldened, and created like a giant shout out to, because at the end of the day, wealth is a big part of this ecosystem in terms of even having an opportunity to be successful because of the way venture firms work today. And so, you know, there's always going to be a number of approaches that we're going to have to take. And the point and the key is we're all in this together. It's not just Black investors, Black entrepreneurs, our operators that are going to be part of this. We've all got to come together as an industry to drive the change going forward. So with that, I want to thank this incredible set of panelists for taking the time here to join us in this conversation, sharing your experiences of what you've seen over the last 12 months, and holding us as an industry accountable to the change and continue to push us forward moving forward. So thank you all. And with that, I'm going to hand off to my partner in crime, Sydney Sykes, for the next part of our program. Thank you.
Thanks, Fred. That was a great discussion. Would love to bring on Lo Tony now. Lo, I'll wait for you. Great. Lo, it's awesome to have you on. It's great to chat with you again. We've known each other for a long time.
Yes.
Part of the reason we wanted to have this chat between you and I is because you sit at a really interesting point in the venture capital ecosystem. You not only were a partner at GV, large corporate institutional firm, you also then started Plexo, your own fund, which not only continues your investing in startups, but also allowed you to become an LP investing in seed funds. So you sit at kind of all of the intersections and you've seen the industry from so many different angles.
Including as an entrepreneur as well. So I was both a company founder as well as a co-founder and a hired gun, horrible term, a hired in CEO as well. So yeah, it's interesting just to think about the perch that I have and the visibility, and I think a lot of empathy with both other GPs that are establishing their own firms, because I go through the fundraising process. We do not have permanent or evergreen capital, so we have to go to the capital markets to be able to deploy capital. So I get to sit, and I really feel more like an entrepreneur, because when I think about what journey that I'm on at this point, we're just at the beginning, and I feel like I'm exercising more of the muscle that is going back to my days as an entrepreneur, as opposed to the muscle that I was using at GV, where, you know, there were seemingly endless resources. You know, Uncle Larry and Uncle Sergey would just, you know, give us $1 billion every year, and we didn't have to worry about fundraising. So it allowed us to really focus in on just sourcing the best deals and supporting those entrepreneurs. And yeah, it's a little bit different, but I'm happy to be here. I'm really pleased just to see how much work has been done by your group under your leadership, along with your fellow co-founders. And just want to first just tip the hat and just thanks for all your work.
Yeah, I appreciate that. It's funny that you say you still feel this scrappy entrepreneurial spirit, because I think so many people would look at you when they're thinking about raising their own fund and say, you know, Lo's been through it all. He's figured it out. But I want to go through a couple different points in your career, because like I mentioned, you've touched so many different sides.
Sure.
Let's start with the investor side of things. You've been an investor for a while, so you've seen how the industry has changed. And I think, frankly, a lot of Black VCs will say there really hasn't been that much change. There's been a few more, maybe the change has been on the partner level or people starting their own firms. But especially on the junior side, there hasn't been a lot of change there. I'm curious to hear from you. Where do you think the bottlenecks are? What do you think is stopping the progress of having more Black institutional VCs?
If I think about my start, it was a little serendipitous. I went back to, I got the gray hairs to prove that I've been around the block a few times. And when I went back to grad school in the 90s, I mean, it was the mid 90s, I graduated from Cal in 97. I went in thinking that I wanted to be an investment banker. And, you know, the luck of proximity to Silicon Valley allowed me to get visibility into the world of early stage. And we had a lot of venture capitalists that came in to speak to the class. And I stepped back and I was like, wow, that's actually a lot more interesting at the front end of the process as opposed to the back end. I think that would be a little more interesting. And I remember going to the websites of the firms, and, you know, not much has changed in that sense, because, you know, it was just a sea of faces of white males who went to, you know, some elite prep school and then to either Harvard or Stanford for undergrad, and then either Harvard or Stanford for grad school for their MBA. And, I kind of said, okay, well, fine, but I, want to figure this out anyway. The path that was communicated to me by these folks that were coming in, I was the eager beaver running up, hey, how do I be like you? And they said, hey, go and be a CEO is a great path of a tech company. And, how do I become a CEO? Or, hey, run a big P&L and do product management as the functional skill set, because product management as a functional role uses a playbook that's very similar to the playbook of early stage venture capital. Understanding a market opportunity or a problem, what are the existing solutions, what are those solutions missing, what would be the optimal solution to meet the needs of a defined set of customers that's big enough to allow a company or product to achieve venture scale and figure out the distribution, how to make money. And so that's the same playbook as, in many regards, as early stage venture capital. So that's the path that I set out on. Now, I think, if we think generationally, like the thing that I see within my generation, I am firmly in Gen X, and I think I remember when I went to eBay, and eBay was a public company at this point. I was employee like 2848, and that was 2002. And I wanted to learn product management. I wanted to go to a nice branded company. And I remember my fraternity brothers like being concerned for me financially. And they were like, oh, that's super risky. And, that was the mindset though, right? That was the mindset of my generation when I was early in my career. Not a lot of us were going into tech, kind of if your parents had paid this education for college, they wanted to see, hey, go to work for a Bain McKinsey, a Goldman, Morgan Stanley. If you're going to go work for a product company, go to like Procter and Gamble, right? And if you want to do something on your own, be a doctor or a lawyer or something of that nature. But, tech, that's crazy. No one does that. And fortunately, with your generation, that's changed. So I'm optimistic and hopeful because what I see is a pipeline of people that are gathering the necessary skills, the hard skills and the soft skills, and the network to be able to be successful in our industry, right? There's a lot of folks that are working at startups, they're working at the large tech companies, they're doing things like product management, they're learning the process of starting a company and being a CEO and having to fundraise. All of those are great skills to have if one wants to go on to the other side of the table. So I'm bullish, but look, it's not happening. I think we would all agree we want to see things happen faster. And when you look at the data, what the data says is, the share of venture capital dollars, right? 93% of those dollars are controlled by white males, but white males are only 30% of the population. And, when you look at, Black females, let's look at Black females, right? Like Black females, in essence, because the numbers are so low, they basically have, 0%, right? Because it's just so low, but 6% of the population. And, if you look at it in terms of, partnerships, Black women are, 1% of the available partnerships, where white males are 68% of the available partners in the partnerships. So we have a long way to go. Now, I like the progress that I've seen, especially, again, I use your generation. I think your generation is a pivotal point for what we need to see moving forward. I think the way your generation kind of just thinks about the world is just so dramatically different, even from millennials, and without question, my generation and my mom, who's a baby boomer. I'm hopeful, but it's not happening fast enough.
Do you think there's anything that's happened? So a year ago, we keep reflecting on a year ago, there was this summer of George Floyd, summer of the BLM movement, even though a lot of these moments had happened before in similar senses. Do you think there's anything that's happened over the past year or the past couple years that could be a sign for future change?
I think so. Look, we're tracking a lot of venture funds. We've got over 1,100 firms in our database, and we have had some kind of touch point with, I don't know, probably over 400 at this stage. So the thing that I do see is I see a lot more interest in people wanting to start their own firms. Okay, that's really good. That's solid. Um, Often I do get a little concerned that people want to, kind of skip level a little bit. But nonetheless, I mean, if I think about, just going back to our data and what we see within our database, I think the good news is of those over 1,100 firms, 39% have a female GP. And then when we start to slice it even further, 46% are underrepresented or underestimated minorities, and 17% are underrepresented minority females. So I like the fact that, we are seeing more people going into the industry. I mean, the size of the funds is still really small, and, your strategy is your fund size. So often these are people that have the experience at a larger multi-stage firm, but because of the inability to raise enough capital to invest across multiple stages, they end up investing at the early stage, right? Pre-seed, seed, kind of rounds of less than or $5 million or less. So I think what is important to recognize is that there's more available capital in the hands of diverse investors. And we know based on data that diverse investors tend to, because of their indirect path into venture, because of their different lens, they tend to have access to networks to pull in that differentiated deal flow and then apply a different lens, which means that they understand not every entrepreneur is going to look like Mark Zuckerberg when he was, 15 years younger. So that's good, because I think overall that provides a kickstart to the flywheel to kind of get things going. And so the more capital we can get into the hands of diverse GPs, they in turn will get capital into the hands of diverse entrepreneurs. And we know also, based off the data, the early employees of a lot of those companies led by diverse founders, Black entrepreneurs in particular, tend to also be Black or underrepresented minorities. If those folks start to have exits, then what we'll see is they'll change the financial calculus for the founder. The founders will go down wealth creation path, but also for those employees who will now be able to, with more security financially, be able to take a risk and start a company, invest in their colleague, maybe invest into a venture fund or become a GP themselves. Capital will go back to that group of diverse GPs that made that investment. If they string along enough of those wins, those GPs will go down a wealth creation path. And then I think we as the limited partner community will see that, oh, wow, there are actually financial focused benefits, and hey, we should double or triple down and then provide more capital to the diverse GPs to let them do their thing. I mean, there's no shortage of talent, right? No geography, no ethnicity, no gender has a monopoly on talent, creativity, drive, and the vision to be able to create these companies. It's really often coming down to access to capital.
Right. I think there's such a chain to these things, and they're so interwoven that you almost can't separate the issues. You talked a lot about people starting to raise funds. Curious about your experience raising a fund. Specifically, were LPs talking about diversity? And over the past year, have you seen LPs talking to GPs, talking to emerging VCs about diversity being a mandate for them?
I tell you, Sydney, this is one of the most fascinating things, because look, when I came up with this idea, it was based off of some things that we were doing at GV, Google Ventures, the early stage investing unit for Alphabet, Google's holding company. We were using the strategy of investing as an LP into seed stage and pre-seed firms led by Black GPs. So we had 5 original firms, right? We had the very first firm was Cross Culture, which is now merged with M Ventures to become Mac Ventures. That's led by Marlon, Adrian, Charles, and Mike. We invested into Next Play, which is Ryan Neast, former NFL, son of Ronnie Lott. And it's really a fund of funds model. We did Eric Moore at Base Ventures. We did Charles Hudson at Precursor. I brought in Eric and Charles, and then we did Miriam Rivera at Ulu. So that was the original GV5. And the strategy was, hey, Larry and Sergey want us to deploy more capital. We're going to do that by accessing deal flow through these GPs. So we had the insight around the ability to gain access to a differentiated set of deals that we weren't seeing. And we felt there was a little bit of an alpha opportunity if we were going to be able to kind of see some of these opportunities earlier and get in at a little more attractive valuation. And I looked at that around February of 2016 when I was seeing that it was working, and I said, I think there's a standalone opportunity. And that was the genesis for Plexo Capital. And then fortunately, they didn't like kick me out when I said, hey, I think I want to start this. They actually encouraged it because Alphabet's very entrepreneurial. My former manager, David Crane, the CEO of GV, said, hey, look, use your 20% Google time, go explore it, and then come back and let's see what you got. And I came back around Thanksgiving. I said, I think there's something here. Moved over as an entrepreneur in residence. Plexo Capital was my company and incubated it for 1.5 years. But let's go back to that time period, right? So we're talking 2016. I started talking to prospective investors because I said, oh, I think if GV could use this strategy, maybe Intel, maybe Cisco could use this strategy. So I was talking with them and the narrative wasn't where it is today, right? Like I had no choice but to lead with the business case, because when I was talking about diversity, people were like scratching their head. And then I was layering in, well, we're going to have this multi-pronged strategy. We're investing as an LP to source deals, to do directs, and we're going to use a lot of data. People were looking at me like I was crazy. So I just kind of just focused in on, hey, we're going to bring good deal flow. We're going to give good returns. And that was my value prop. And I said, hey, we've got this little unique insight that we have from our days at GV. And I have to say, if I wasn't able to fundraise with saying this strategy came from GV and I have Alphabet as my anchor, if I didn't have that, Plexo Capital wouldn't exist today. Now, could I start Plexo Capital today without having the ability to say it originated at GV and Alphabet's our anchor? I actually think I could, but because the narrative has changed, right? But back when I got started, this was not common. We weren't really, think you're all the way back, right? Me Too kind of was just getting started, but not quite to the crescendo. And, we've had murders of unfortunately, of Black people for a long time, but we hadn't had that level of profile of Breonna Taylor, George Floyd during a period where so much attention was focused on it because everyone was, at home during a pandemic, the rise of everything being captured on video. And so it's a different narrative today. It was challenging and remains challenging. Look, I think, raising money is hard. It's hard no matter your gender or ethnicity, founders, GPs, it's hard. It's just that much harder being a Black man, and would be even that much more harder being a Black female. So it's already hard, and then we have to overcome additional things. And then often we talk about like these types of strategies and people want, oh, well, that's impact. That's like, no, that's like, yeah, I believe as a byproduct of our strategy, we will help increase diversity overall in the ecosystem. But in my mind, and in your mind as well, I mean, from your perspective, kind of coming out of NEA, like when we hear certain things, it's like, oh, we don't do that. We put that in this impact or social bucket. But the only thing that's different about what we're doing is, well, we're talking about making LP commitments into GPs that are, Black folks or females. Like, so why does that have to go into the impact? Why can't that just kind of start out with, oh, wow, yeah, that's a unique way to make money. So those are the things that I try to focus on. I am very pleased that we have gotten to a point of recognition with the unfortunate killings, both before and after Breonna Taylor and George Floyd, that we can have these conversations more openly now. Like Elliot, I don't necessarily like these funds that are flagship and main funds and try to have a separate fund just for diversity, just for diversity's sake. I mean, Elliot calls that diversity theater. I totally get what he's saying. I had that experience in my past. And it kind of almost puts this, thing of, well, that means that if you got money and it came from that little diversity fund, then, it's not real money, or it's like charity money. So, I think we need to really focus in on these people are making money the same way everyone else is making money, right? It's just that often we're doing it with a different type of company and making that selection using a different lens that's much more inclusive.
Yeah, I totally agree. It's such a business case. We are, at the end of the day, investors, and we care about Black communities. But the reason we chose venture capital as the avenue for that is because we were interested in creating new businesses and interested in the capital that it's exposed to. And for all of the success stories you hear about people like you and everyone who's on the panel before, we don't hear about all those people who tried to raise a fund for years and it didn't come through. We have really just 1 minute left. I'm curious if you have any word for the future in terms of people who are raising funds now. How can we change the conversation to make sure there are more Black GPs who are able to raise their own funds?
I really believe it's the ability to gather the skill set, the network. I mean, that's really important. I think it's also important for us to really be open and supporting and helping each other. The ability for us to think that, well, look, if I can get through this door or window, I'm going to close it behind me because I don't know how many, opportunities there are. I think we got to, okay, if I get through the window, then I'm going to go straight to the front door and kick the front door open and say, hey, come on, everyone come in now. I think that's the mentality that we need to have, is being able to support one another and not thinking about this as a zero-sum game and competition for a limited number of dollars. There's a lot of capital out there to be able to support many more Black GPs.
I totally agree. Thank you so much, Lo. I hope you
Thanks.
set a great example for everything everyone can do next, being an entrepreneur, being a GP, being an LP. I'm hoping we'll see a lot more of that.
Awesome. Thanks for having me.
Thank you. Fred, you can come back on and we'll wrap up. We really appreciate everyone signing on today. This has been a really incredible, really honest conversation, and we hope that these kind of conversations aren't just happening once a year. They aren't just happening when a specific moment comes up, but that we're integrating them into our lives, and that you're always, like Fred said, looking around the room and seeing what's lacking. Because if your room is lacking a certain perspective, your returns are going to be lacking that perspective. Your entrepreneurs are going to be lacking that perspective. Your businesses are going to be lacking. I'd like to take a moment to thank our sponsors who have helped us throughout this year. They've been an incredible source of support. They've helped us stand up some great initiatives over the past couple of years, and they've been instrumental to our success. We'd also like to thank our participating firms. We had quite a few firms sign on, some of whom joined us last year for We Won't Wait, some of whom were new. We've raised over $40,000 for nonprofits fighting racial injustice and striving for racial equality. It's been an incredible week to bring this event together and to bring all these perspectives, the voices, the dollars, the change. But like I said, this is about being the change. It's about living it. And we expect this to be a long-term movement and something we continue to fight for. Thank you all so much. See you soon.
Thank you so much.